Spot gold is showing a high-range consolidation trend today. Currently, spot gold is quoted at $4,194.68, edging up $0.19 with a 0.00% increase. And overall fluctuations are relatively mild. On the market driver front, the core focus remains on the Federal Reserve's monetary policy moves. The current market expectation for a 25-basis-point rate cut by the Federal Reserve in December has risen to 90%. The expectation of a low interest rate environment continues to reduce the opportunity cost of holding gold, providing basic support for gold prices. However, the market's previous downward revision of expectations for the magnitude of the Federal Reserve's rate cuts next year stimulated a surge in U.S. Treasury yields, leading to gold prices coming under pressure and falling below the $4,200 level, thereby intensifying short-term long-short divergence. In addition, geopolitical uncertainty continues to provide support for gold's safe haven demand. The United States is putting pressure on Ukraine to agree to a peace deal with Russia, and potential changes in the geopolitical situation have enhanced gold's safe haven appeal, forming a certain floor support for gold prices. At the same time, the global trend of central banks continuing to purchase gold remains unchanged. For example, the People's Bank of China has increased its gold holdings for 13 consecutive months. Combined with factors such as expectations of a weaker U.S. dollar and increased demand for gold ETFs, it would still constitute a long-term positive for gold prices. Latest trading indices' upward trend remains intact, but buyers have failed to maintain the spot price above $4,200, which may open up room for a price pullback. The Relative Strength Index RSI indicates that upward momentum has weakened somewhat, and the index is currently stabilizing, suggesting that buyer sentiment has softened ahead of the announcement of the FOMC decision. Regarding key levels, for support levels, focus can be placed on yesterday's low of $4,192, which is also close to the 10-day moving average on the daily chart and has a certain technical support strength. If this level is breached, subsequent attention should be paid to the 20-period SMA support on the 4-hour chart around $4,180, as well as the previous low support around $4,160. For resistance levels, short-term attention is on around $4,220, which was the rebound high after yesterday's gold price plunged and is also a key resistance. For today's intraday rebound, if an effective breakthrough can be achieved, further resistance above can be seen at $4,230 and the previous high of $4,259. The latter is also close to the upper track of the Bollinger Bands on the daily chart, with relatively strong resistance. Overall, spot gold is currently in the late stage of strong consolidation, with the medium to long-term upward trend remaining intact. However, affected by the wait-and-see sentiment ahead of the Federal Reserve's decision in the short term, it is likely to maintain a high-range consolidation pattern. Disclaimer: all the above content is for reference only and does not constitute any investment advice. Any trading decisions made based on this information are at your own risk of profit or loss.